Still tuned into Midcap Radar. Let's get to Landmark Cars, which is in focus on the back of their latest business update. The company closed FY23 with 36% growth in sales. Its after-sales business grew about 26%. To discuss more, Sanjay Thakkar, the chairman at Landmark Cars, is joining us now to discuss the current trends and the outlook going forward as well. Mr. Thakkar, good afternoon. Thank you so much for joining us. Well, it's been a good growth, 36% on a YOY basis. But you did mention in your press release that vehicle sales revenue was impacted by chip shortage and discontinuation of certain models. Had that not happened, what kind of revenue growth would you have seen? What amount of sales were impacted because of this scenario?
Yeah, quite a bit. Talking of, say, Mercedes-Benz, and what I'm telling you has already been in public domain for a while. The company, Mercedes-Benz as a brand, did some 15,800 units for the calendar year 2022. And at that time, some 7,000 unfulfilled orders were there. Just imagine what we are talking about. The company has also published their quarterly numbers right now, and they are at what, 4,600 odd units for the first quarter, with again a very large amount of back orders which are unfulfilled. So the whole of last year, and this is just one of the brands that I'm talking about, and a similar situation was there to some extent in most of the brands that we represent. So the last year was where the chip shortage was there. There was Ukraine war. There was logistics issues because of COVID shutdowns in Shanghai. And if it was not there, our growth would have been significantly higher than what we have reported. Now, how much more? I really don't know what to say to that.
Okay, fair enough, sir. But now that the situation is easing on the chip, supply shortage issue, what can FY24 growth look like for you? You're ending FY23 on a solid note, despite all the headwinds, 36% top line growth, 4,600 crore nearly in terms of sales. Could you give us an indication? What is the internal target for next year?
Yeah, so I wouldn't want to put a number to that right now, but what I can say is that now that the supply situation is getting better, the demand situation is on balance quite fair, and the after-sales business for us, which also you mentioned that there was a 25-26% growth, which is actually more than our last 8-9 year average. So this is something which is getting into a very solid base, and that compounding will happen. The average selling price of every vehicle that we sell has been also growing. So really, we'll be disappointed if we grow anything less than what we have already grown at.
Okay. So you are penciling in growth of around 36 to 40% in FY24 as well?
I'm not putting a number as of now to that, but I mean, you can do the math yourself and see where it will end up. And we haven't added the new launches of some of the brands that we represent. Those cars are yet to come. And the acquisitions that we will hopefully do during the year. So a lot of things which are in the pipeline. Many things will happen this year. It's likely to be a good year.
Can you tell us what are the acquisitions you're likely to do? What's the thinking on the M&A front?
So we will do acquisitions. We have, over a period of time, last 20 years, we have acquired dealerships when there is no fizz in the market, where we do it in a way that our payback is in 4, 5 or less than 4 years is when we get our monies back. So that's the focus going to be. We will put capital to use where the returns are predictable, certain. This industry is a little bit cyclic, and we have seen that happening. So we are in a good zone. So we will not mess it around. We will put money where the returns are, and the ROC is very good.
So, Mr. Thakkar, any kitty that you've set aside for such acquisitions that you are looking at in this year itself? Anything?
Yeah, the company has been generating good amount of free cash. We have also raised money from the IPO proceeds, which are all parked to repay our short-term debts. That's what we have done. So the opportunities are galore, whether we expand into the car care business, that's what we are going to be doing in a meaningful way, where our margins on the after-sales business will also hopefully show some growth. We will also double into the pre-owned car business, again, without adding to any kind of stock or losses. The pre-owned car business, as you may know, for the last several years was dominated by organizations which were focused more on GMV and less on profitability. And that is something that is now out of the way, hopefully forever. Landmark will be a decent player in the pre-owned car business also. So we have a lot of things happening at our end. All our senior guys are busy planning what to do, where to allocate manpower, resources. What I can also say is that in the last year, we have grown without adding to our outlets or to our manpower count. So the operating leverage is what we have kind of kicked in, and that's what we will be focusing on always.
Okay, so Mr. Thakkar, when you talk about focusing more on the other segment as well, so I just wanted to understand the split between new vehicle sales and used segment. What is it currently?
So right now, let's look at the figures from, say, America. In America, 30% of the used cars sold are by the new car dealers. In India, that number is 4%. At Landmark, we are not, as of now, any meaningful players. We have been kind of buying and immediately selling it out in the open market for some kind of a commission. Now, this number, maybe when I come to you next after our annual results are declared, I will be able to put a number to what we are talking about. But we will make a foray into the used cars where we believe we have a natural edge. And now that GMV is not a matrix that people will be looking at. And Landmark has always been looking at profitability as something that should be driving the business.
So you will be making a foray into pre-owned or used cars in FY24, right? That's one of your plans for next year. How big is the pre-owned market? Could you give us the size of the industry? And also, what is the expected profitability? Since that's something that you've got a laser-sharp focus on profitability, what's the expected profitability on the used car segment for you that you anticipate? Two numbers, sir.
So the used car market is bigger than the new car market in number of unit terms. People have been focusing on the number of units sold as the size of the market, not the best of ways to measure something. What Landmark will be doing is that Landmark will be focusing on only the brands that they are representing. So what do we represent? We represent Mercedes-Benz, we represent Honda, we represent Volkswagen, we represent Jeep, we represent Renault, we represent BYD. So the brands that we represent, we will be meaningful players in the pre-owned cars sales of those brands only. We will not be wanting to buy any other brands that we don't represent, because we believe that there is a natural traffic that we get for customers who want these brands from us. And that's where we can add value. We have service histories, we can sell maintenance contracts.
Right.
So it's a natural fit that we are talking about.
Right.
We are not going to be doing anything more adventurous. There is enough on the plate.
And so profitability for you on pre-owned?
Yeah, so generally the pre-owned cars have 7-8% gross margin. That's the industry, what we have seen. And we will want to kind of see that we make those kind of margins or more in the business that we do. It will be early days, but I'm kind of sticking my neck out and say that we are going to be doing this now that the loss-making competition is out of the way.
Okay. All right. Mr. Thakkar, it was a pleasure speaking with you, sir. Thank you so much for joining us and giving us a sense as to what's happening in the industry, your expansion plans and the outlook going ahead as well. That's the word coming in from Landmark Cars. We'll slip into a short break now and get you more on markets and our special segment.